Welcome back to Crypto Analytica. Don't forget to like this video and subscribe to the channel for more in-depth crypto insights. Today, we're taking a deep dive into XRP. We're going to see if it makes sense as an investment for 2025.
We'll be focusing on its fundamentals, analyzing both its strengths and weaknesses as an investment tool. We'll be drawing on multiple expert analyses and recent market trends to form a complete picture.
So to start, let's quickly recap what XRP is and how it fits into the Ripple ecosystem.
XRP is a digital asset. It's built for the Ripple blockchain. Its main purpose is to smooth out the process of cross-border transactions for businesses using the Ripple network. It acts as a bridge between different currencies, allowing for seamless exchange between traditional fiat currencies like the US dollar or the euro and cryptocurrencies like Bitcoin.
One of the most compelling aspects of XRP is its speed and cost-effectiveness when it comes to transactions. Can you expand on that?
Ripple's technology allows for interbank transactions to be completed in mere seconds, and with fees significantly lower than traditional methods. For example, a typical SWIFT transfer can take several days and cost upwards of $30, while an equivalent transaction using XRP can settle in 3 to 5 seconds for a fraction of a cent.
That speed and cost advantage has caught the attention of several financial institutions. Can you tell us more about Ripple's partnerships in the financial sector?
Ripple has been actively working with banks and payment providers globally to integrate their technology. For instance, Santander is using Ripple's on-demand liquidity solution for cross-border payments, and SBI Remit is using RippleNet to power real-time remittance payments between Japan and several Southeast Asian countries. These partnerships demonstrate real-world adoption of XRP.
These real-world applications speak to Ripple's stability and credibility.
Absolutely. That stability is further reinforced by the strength of Ripple's team and the continued support from investors. This contributes to the perception of XRP as a reliable and potentially profitable investment.
Another point we can't ignore is the regulatory clarity surrounding XRP. Let's revisit the impact of the 2023 ruling.
That 2023 ruling was a turning point for XRP. As it removed the uncertainty surrounding its regulatory status by declaring that it's not a security when sold publicly. This paved the way for wider adoption and made it a more attractive investment for institutions.
It seems that ruling triggered a surge in interest from institutional investors. What evidence are we seeing of this?
We've seen some very concrete examples. WisdomTree, a major asset management firm, has filed for an XRP exchange-traded fund, ETF. If approved, this would make it easier for traditional investors to gain exposure to XRP. Additionally, the Beecher Exchange predicts that XRP will reach a new all-time high by the first quarter of this year, citing growing demand and a favorable regulatory environment.
Those are certainly indicators of a positive outlook for XRP. And in terms of usage, the recent surge in XRP's transaction volume, surpassing 2 million, seems to suggest growing adoption.
That's correct. This surge in transactions, coupled with its ability to outperform many other cryptocurrencies during recent market downturns, adds to XRP's attractiveness as a resilient investment option.
Now, while XRP has its strengths, we should also acknowledge its potential drawbacks. One concern that's often raised is the level of centralization surrounding XRP.
Yes, it's true that a significant portion of XRP is held by a small number of entities, which raises concerns about potential control and manipulation of the network. This concentration of ownership goes against the decentralized ideals that many cryptocurrency proponents champion.
And despite XRP's resilience in recent times, its historical price volatility is another point investors need to consider.
That's right. XRP has experienced significant price swings in the past, which is a reminder of the inherent volatility of the cryptocurrency market. Investors with short-term horizons need to be particularly mindful of this.
Lastly, we can't forget the competition XRP faces in a market that's attracting more and more cryptocurrencies aiming to disrupt cross-border payments.
The cryptocurrency landscape is constantly evolving, and several new projects are targeting the same market as XRP. It's important for investors to evaluate this competition and its potential impact on XRP's market share going forward.
To gain a more in-depth understanding of XRP's potential, let's turn to the insights of experienced traders and analysts. What are the views of well-respected veteran trader Peter Brandt?
Interestingly, Peter Brandt has had a change of heart regarding XRP. He was a vocal critic of the asset in the past due to its substantial losses against Bitcoin. However, he recently surprised many by praising XRP's performance and even offered a price prediction.
What has led to this shift in Brandt's perspective?
Brandt admits that his past criticisms were driven by his focus on protecting trading capital. He now acknowledges the success XRP holders have enjoyed, and he's even bullish on its future prospects.
And what exactly is Brandt's prediction for XRP?
He believes that if XRP confirms a specific chart pattern, known as a half-mast flag, its market cap could reach an astounding $500 billion. This prediction suggests a potential tripling of its value from its current level. To provide some context, a half-mast flag pattern involves a sharp price increase followed by a period of consolidation within a narrowing price range, resembling a flag on a pole. A breakout above the upper boundary of this range is considered a bullish signal, potentially leading to a significant price surge.
That's certainly a bold prediction. Are there any other analysts with noteworthy price forecasts for XRP?
eGrag Crypto and The Great Gatsby, two prominent analysts in the crypto space, have set price targets of $4 and $9 respectively for XRP. These predictions add to the growing chorus of bullish sentiments surrounding the asset.
These predictions do paint a very optimistic picture. However, are there any dissenting voices or concerns we should consider?
While the general sentiment seems to be bullish, some analysts express caution. One analyst, who chose to remain anonymous, predicts a potential 70% drop in XRP's price if it fails to reach $4 by March 10th of this year.
That's a significant contrast to the other predictions we've discussed. What's the reasoning behind such a stark warning?
This analyst believes that a potential 70% drop in XRP's price is linked to the upcoming lunar eclipse. They point to a historical correlation between lunar eclipses and cryptocurrency market corrections. However, it's worth noting that this correlation lacks any robust economic basis and should be treated with a healthy dose of skepticism.
So, as we've seen, there's a wide spectrum of opinions regarding XRP, ranging from highly optimistic to more cautious. Ultimately, the decision to invest in XRP comes down to each individual's risk tolerance and due diligence.
Exactly. Before making any investment decisions, it's crucial for individuals to conduct their own research, thoroughly evaluate the available information, and assess their personal investment goals and risk appetite.
With that said, we need to synthesize all this information to give XRP an overall investment and sentiment rating on a scale of 1 to 10. What would you say is a fair rating for XRP today, January 13th, 2025?
Taking into account XRP's strengths, including its speed, low transaction costs, growing adoption by financial institutions, recent regulatory clarity, and the wave of positive sentiment from experts like Peter Brandt, I believe a rating of 7 out of 10 is appropriate.
That seems like a reasonable assessment, reflecting both the promising potential of XRP and the inherent risks and uncertainties associated with the cryptocurrency market.
Precisely. This rating encourages further investigation and suggests that XRP could be a worthwhile addition to a diversified cryptocurrency portfolio. However, it also acknowledges that caution and careful consideration are necessary before making any investment decisions.
Before we move on, I'd like to leave our viewers with a thought-provoking question. Does XRP's focus on bridging traditional finance and crypto signal its long-term potential? Or could it limit its growth in a future that might favor decentralized solutions?
That's a very important question. It's something investors should seriously consider. XRP's strategy of partnering with established financial institutions does set it apart from many other cryptocurrencies that prioritize complete decentralization. This approach has undoubtedly contributed to its success so far, but it also raises questions about its long-term viability if the financial world shifts towards more decentralized solutions.
Indeed. It will be fascinating to observe how XRP navigates this evolving landscape, and whether its current approach will prove to be a strength or a weakness in the years to come. But before we delve into that, we'll explore the history of XRP, including its origins and the controversies that have surrounded it. So stay tuned for part 2 of our deep dive coming up after a short break.
It's a complex question with no easy answer. XRP's close integration with existing financial systems could give it a significant advantage in terms of adoption and scalability, as it's already being used by major banks for real-world transactions. This gives it a level of legitimacy that many other cryptocurrencies lack.
But on the other hand, some argue that this reliance on traditional institutions could hinder XRP's ability to fully realize the potential of a truly decentralized financial system.
Precisely. There are concerns about the control that Ripple, as a company, exerts over the XRP ledger. The fact that Ripple holds a large percentage of XRP tokens and can influence its development raises valid concerns about centralization, which goes against the core ethos of decentralization that many crypto enthusiasts believe in.
It represents a tension between pragmatism and idealism. But let's shift our focus to another aspect of XRP that we haven't discussed yet, its origins and the controversies that have surrounded it.
The concept behind Ripple actually predates the advent of Bitcoin and even the term cryptocurrency. Ripple Pay, the precursor to the Ripple network, was developed by Ryan Fugger back in 2004. His goal was to create a secure and decentralized payment network, long before Satoshi Nakamoto released the Bitcoin white paper in 2008.
So how did Ripple Pay evolve into the cryptocurrency-based Ripple network we know today?
Jed McCaleb, an early Bitcoin pioneer and founder of the infamous Mt. Gox exchange, saw potential in Fugger's concept. He believed that Bitcoin's mining process was too energy-intensive and costly, and proposed an alternative. McCaleb, along with Chris Larson, took over Ripple Pay from Fugger in 2012 and began developing the Ripple network, incorporating the XRP or digital asset as a key component.
But this transition wasn't without its share of controversy. Even back then, there were concerns about the level of centralization within the Ripple system.
Yes, the allocation of 20 billion XRP tokens to the founding team, including McCaleb and Larson, raised eyebrows and fueled accusations of unfair advantage.
And then there's the story of Jed McCaleb's departure from Ripple and the subsequent creation of Stellar.
McCaleb left Ripple in 2014 to found Stellar, a competing blockchain project with its own native token, XLM. This departure created uncertainty in the market because McCaleb owned a significant portion of XRP at the time. To address these concerns and prevent a potential market crash, Ripple and McCaleb reached a formal agreement that restricted his ability to sell large amounts of XRP at once.
This agreement aimed to stabilize the market and prevent any sudden price collapses. However, this wasn't the end of the controversy surrounding McCaleb's XRP holdings. There were further legal battles in 2016 as Ripple sought to further restrict his selling activities.
These legal challenges highlight the inherent tension between the centralized nature of Ripple's control over XRP and the decentralized ideals of the broader cryptocurrency community. It's a debate that continues to this day.
Another point of contention has been the balance freezer feature that Ripple introduced in 2014. Can you explain what this feature entails and why it has been criticized?
The balance freezer allows Ripple to confiscate or freeze any non-XRP currencies held by users on the network if they are suspected of violating anti-money laundering rules. While this measure was ostensibly implemented to enhance security and compliance, it raised concerns about censorship and control.
Critics argue that this feature contradicted the decentralized nature of cryptocurrencies, giving Ripple excessive power over user funds.
Exactly. The ability to freeze balances, even for legitimate reasons, goes against the principle of user autonomy that many associate with cryptocurrencies. It's a reminder that XRP, while operating on a decentralized ledger, is still heavily influenced by a central entity, Ripple.
Now let's consider the potential impact of Elon Musk on XRP's future. There's been much speculation about his plans for X, formerly known as Twitter, and its potential integration with cryptocurrency payments.
Elon Musk's influence on the crypto market is undeniable. His statements and actions can move markets, and his vision for X as an everything app, including a payments platform, has sparked intense interest. There have been hints that X may integrate cryptocurrencies, possibly even XRP, into its payment system.
While Musk has been cautious about explicitly endorsing any specific cryptocurrency, his comments suggest a preference for decentralized solutions that promote individual freedom.
This has led some to speculate that XRP, with its focus on bridging traditional finance and crypto, could align with his vision. However, it's purely speculation at this point. Musk has not confirmed any concrete plans regarding XRP integration into X.
Investors should approach such rumors with a healthy dose of skepticism and wait for official announcements before making any investment decisions. Now, let's delve into the technical aspects of XRP and its underlying technology. How does the Ripple Consensus Protocol, known as RPCA, differ from the proof-of-work and proof-of-stake mechanisms commonly used by other cryptocurrencies?
The Ripple Consensus Protocol, or RPCA, operates quite differently from proof-of-work, PW, and proof-of-stake, POS. It's designed to achieve consensus on the network without relying on energy-intensive mining or the staking of large amounts of tokens.
So how does RPCA actually work?
RPCA utilizes a system of trusted validators that form a unique node list, or UNL. These validators propose and vote on transactions, aiming to reach an agreement on the validity of each transaction and its inclusion in the next block. This voting-based consensus mechanism is designed to be fast and efficient, enabling Ripple to process transactions at a much higher rate than many other blockchains.
However, this reliance on a predetermined set of validators has also been a source of criticism. Critics argue that it undermines the decentralization aspect of cryptocurrencies, giving Ripple too much control over the network.
That's a valid point. The selection process for UNL members is not entirely transparent, and there are concerns about potential bias or manipulation. This lack of transparency raises questions about the true level of decentralization within the Ripple network.
It boils down to the ongoing debate between the efficiency and scalability offered by a more centralized system versus the security and resilience of a fully decentralized network. Finding the right balance between these competing priorities is a challenge for all blockchain projects, including Ripple. Now, let's zoom out and consider the broader macroeconomic landscape and its potential impact on XRP. How has the global economic climate of recent years influenced XRP's performance, and what factors could shape its future trajectory?
The global economic landscape has been turbulent in recent years, with geopolitical tensions, supply chain disruptions, and rising inflation impacting markets worldwide. These macroeconomic factors have inevitably spilled over into the cryptocurrency market, influencing XRP's price and overall sentiment. Like many other cryptocurrencies, XRP experienced a significant downturn in 2022 and early 2023, as investors sought safer havens amidst economic uncertainty.
The so-called crypto winter saw a decline in overall market capitalization, with XRP experiencing its share of losses. However, as we've discussed, XRP has shown resilience in recent months, outperforming many other cryptocurrencies and bouncing back strongly from its lows.
This resilience is likely due to a combination of factors, including its strong fundamentals, its growing adoption by financial institutions, and the increased regulatory clarity following the 2023 ruling in Ripple's favor. These factors have instilled confidence in investors, positioning XRP for a potential surge as the global economy begins to recover.
However, the macroeconomic outlook remains uncertain. Factors like inflation, interest rates, and geopolitical events could still impact XRP's price and the cryptocurrency market as a whole.
Precisely. Investors should closely monitor these developments and adjust their strategies accordingly.
Speaking of strategies, let's discuss the various approaches that investors can consider when it comes to XRP. What are some of the common investment strategies? And what are the potential risks and rewards associated with each approach?
There are several investment strategies that individuals can employ when it comes to XRP, each with its own set of risks and potential rewards. One common approach is long-term holding, also known as ODing. This strategy involves buying and holding XRP for an extended period, typically years, with the belief that its value will appreciate significantly over time.
This strategy requires patience and a strong belief in XRP's long-term potential.
Indeed. While HODing can be rewarding, it also exposes investors to market volatility and the risk of significant price fluctuations in the short term.
Another strategy is active trading, where investors buy and sell XRP more frequently, attempting to profit from short-term price movements.
Active trading can be lucrative for experienced traders who can accurately predict market trends and manage risk effectively. However, it's a high-risk strategy that requires a deep understanding of technical analysis, market dynamics, and risk management principles. It's not suitable for novice investors or those with a low risk tolerance.
Then there's swing trading, which falls somewhere between long-term holding and active trading. Swing traders aim to capture price swings that occur over days or weeks, holding positions for a shorter duration than HO dealers, but longer than day traders.
It's a strategy that seeks to capitalize on medium-term trends, while mitigating some of the risks associated with short-term price volatility. However, swing trading still requires careful analysis and timing to identify profitable entry and exit points.
Beyond these individual strategies, there's also the option of investing in XRP through various financial instruments, such as ETFs.
As we mentioned earlier, WisdomTree has filed for an XRP ETF. If approved, this would provide investors with an easy and regulated way to gain exposure to XRP without directly owning the asset. ETFs offer diversification and professional management, making them a potentially appealing option for investors seeking a more hands-off approach. However, it's important to remember that ETFs still carry risks, and their performance is directly tied to the underlying asset, in this case, XRP.
So whether you choose to HODL, actively trade, swing trade, or invest through an ETF, a thorough understanding of XRP's fundamentals, technical analysis, and market dynamics is crucial.
Absolutely. Informed decision-making is paramount in the cryptocurrency market.
Now, let's address a common question that many potential investors have about XRP, its relationship to Bitcoin. How does XRP compare to Bitcoin in terms of purpose, technology, and investment potential?
Bitcoin and XRP are often mentioned together, but they have distinct purposes, technological approaches, and investment profiles. Bitcoin, created in 2008, is widely regarded as the original cryptocurrency. It's often seen as a store of value, similar to digital gold, due to its limited supply and decentralized nature. Bitcoin's blockchain utilizes a proof-of-work consensus mechanism, requiring miners to solve complex mathematical problems to validate transactions and secure the network. This process is energy-intensive but highly secure, making Bitcoin resistant to censorship and manipulation.
XRP, on the other hand, was designed with a different goal in mind: to facilitate fast and low-cost cross-border payments.
Its focus on real-world utility within the financial system is a key differentiator from Bitcoin's store of value proposition. As we've discussed, XRP's consensus mechanism relies on a network of trusted validators, enabling faster transaction speeds and lower fees compared to Bitcoin. However, this centralized approach also raises concerns about control and censorship, as we've explored earlier.
In terms of investment potential, both Bitcoin and XRP have their own unique characteristics.
Bitcoin's limited supply and established position as the leading cryptocurrency make it an attractive asset for long-term investors seeking capital appreciation. Its price has historically been more stable than many altcoins, albeit with significant volatility.
XRP, with its focus on real-world utility and growing adoption by financial institutions, presents a different investment thesis. Its potential for growth is tied to the expansion of Ripple's network and the increasing use of XRP for cross-border payments. Its price has been volatile, but its recent performance suggests strong momentum and potential for significant gains.
Ultimately, the choice between Bitcoin and XRP as an investment depends on an individual's risk tolerance, investment goals, and belief in the future of each project. It's also worth considering diversifying a portfolio by holding both Bitcoin and XRP, as their price movements may not always be correlated.
Now, let's shift our focus to the regulatory landscape surrounding XRP. The 2023 ruling declaring XRP not a security when sold publicly was a major victory for Ripple, providing much-needed clarity on the regulatory status of XRP.
That ruling paved the way for wider adoption and investment. However, the regulatory landscape for cryptocurrency as a whole remains complex and evolving. Different jurisdictions have adopted different approaches, and there's a lack of global consensus on how to regulate this emerging asset class.
This regulatory uncertainty creates challenges for businesses operating in the crypto space, including Ripple, and can also impact investor sentiment and potentially hinder the growth of XRP and other cryptocurrencies. What are some of the key regulatory issues that Ripple and XRP are currently facing?
One of the most significant issues is the ongoing legal battle with the SEC. Despite the 2023 ruling, the SEC has appealed the decision, and the outcome of this appeal could have far-reaching implications for XRP's future. Ripple has also faced scrutiny from regulators in other jurisdictions, including Europe and Asia.
These regulatory challenges highlight the need for greater clarity and consistency in crypto regulations globally. The lack of a unified framework creates uncertainty and can stifle innovation. It's an issue that the crypto industry as a whole needs to address to ensure the long-term viability and growth of this sector.
Despite these challenges, there are signs that the regulatory landscape is evolving in a more favorable direction. Some jurisdictions, like Dubai, have actively embraced cryptocurrencies and blockchain technology, creating favorable regulatory environments to attract businesses and investment.
Other countries are exploring the creation of central bank digital currencies, CBDCs, which could potentially integrate with existing cryptocurrency networks, including Ripple. These developments suggest that governments and regulators are recognizing the potential of cryptocurrencies and are working to establish clear frameworks that encourage innovation while mitigating risks.
This evolving regulatory landscape will be crucial to watch, as it will likely shape the future of XRP and the cryptocurrency market as a whole. Regulatory clarity and a level playing field are essential for the long-term success of any emerging technology, and cryptocurrencies are no exception.
Now let's move on to another critical aspect of XRP, its community and ecosystem. The XRP community is known for its passionate and vocal support of the project.
The XRP community, often referred to as the XRP Army, is one of the most active and engaged in the cryptocurrency world. They play a significant role in promoting XRP, advocating for its adoption, and providing valuable feedback to Ripple.
Their enthusiasm and belief in XRP's potential have been instrumental in its growth and resilience, particularly during challenging market conditions.
Beyond the core community, Ripple has also cultivated a robust ecosystem of partners and developers. Through RippleNet, its global payments network, Ripple has established partnerships with hundreds of financial institutions worldwide. These partnerships are driving real-world adoption of XRP and its underlying technology.
Ripple has also fostered a vibrant developer community that contributes to the development of applications and tools built on the XRP ledger. This active developer ecosystem is crucial for expanding XRP's functionality and driving innovation within its network. The strength of the XRP community and ecosystem is a significant asset that contributes to its overall potential and long-term viability.
A passionate community and a thriving ecosystem are vital for any cryptocurrency project's success. And XRP seems to have both in abundance.
Now, let's address another key aspect of XRP, its competition. As we mentioned earlier, several other cryptocurrencies are vying for a share of the cross-border payment market. The competition in the cryptocurrency space is fierce, and XRP is not immune to it.
Which projects pose the most significant challenges to XRP's dominance in this sector? Several projects are targeting similar use cases, each with its own strengths and weaknesses. Stellar, founded by former Ripple co-founder Jed McCaleb, is often seen as XRP's most direct competitor. Stellar's Lumen token, XLM, is also designed for fast and low-cost transactions, and Stellar has established partnerships with various companies and organizations.
Another contender is Ripple's own RLUSD stablecoin. RUSD, recently approved by the New York Department of Financial Services, is pegged to the US dollar and designed for stability, making it a potentially attractive option for businesses seeking to avoid the volatility of cryptocurrencies like XRP.
Beyond these specific projects, XRP also faces competition from established payment giants like Swift and Visa, which are exploring blockchain solutions to improve their own cross-border payment systems. These established players have significant resources and a vast network of existing customers, posing a formidable challenge to Ripple and XRP.
The competitive landscape is constantly evolving, and XRP's ability to maintain its leading position will depend on its ability to innovate, adapt to changing market conditions, and continue building its network of partners and users.
It's a dynamic and challenging market, but XRP's track record, strong fundamentals, and active community give it a fighting chance.
Now let's dive deeper into the technical analysis of XRP and examine some of the key indicators that traders and investors use to assess its price movements.
Technical analysis is a crucial tool for understanding XRP's price trends and identifying potential trading opportunities.
What are some of the key technical indicators that analysts focus on when evaluating XRP?
Analysts often utilize a combination of indicators to gain a comprehensive view of XRP's price action. Moving averages, such as the 50-day and 200-day exponential moving averages, EMAs, are widely used to identify trends and potential support and resistance levels.
When XRP's price is trading above its moving averages, it's generally considered a bullish signal, while trading below the averages suggests bearish sentiment.
Another popular indicator is the Relative Strength Index, RSI, which measures the magnitude of recent price changes to evaluate overbought or oversold conditions. An RSI above 70 typically indicates an overbought market, suggesting a potential price correction, while an RSI below 30 suggests an oversold market, potentially signaling a buying opportunity.
Traders also utilize chart patterns, such as triangles, wedges, and head and shoulders formations, to identify potential breakouts or reversals in price trends. These patterns, formed by the historical price action of XRP, can provide insights into future price movements and assist traders in making informed decisions.
Another important aspect of technical analysis is the use of volume indicators. Volume, which represents the number of XRP tokens traded over a given period, can confirm the strength of a price move and provide insights into market sentiment. Increasing volume accompanying a price increase suggests strong buying pressure and a potentially sustainable upward trend.
Conversely, decreasing volume during a price increase could signal a weakening trend and a potential reversal.
Technical analysis is a complex and nuanced field, and it's essential to remember that no single indicator provides a guaranteed prediction of future price movements. The best approach is to use a combination of indicators and chart patterns to gain a holistic view of XRP's price action and make informed trading decisions.
It's also crucial to consider fundamental factors, such as Ripple's partnerships, regulatory developments, and overall market sentiment when interpreting technical signals.
Technical analysis and fundamental analysis work hand in hand to provide a comprehensive understanding of XRP's potential and help investors navigate the complexities of the cryptocurrency market.
Now, let's delve into the psychological aspects of investing in XRP. The cryptocurrency market is known for its volatility and emotional swings, often driven by speculation, fear, and greed. The psychology of investing plays a significant role in shaping market sentiment and influencing price movements, particularly in a volatile market like cryptocurrencies. How can understanding these psychological factors help investors make more rational decisions when it comes to XRP?
One of the key psychological biases that investors need to be aware of is confirmation bias. This is the tendency to seek out information that confirms existing beliefs, while ignoring evidence that contradicts those beliefs. This bias can lead investors to make impulsive decisions based on incomplete or biased information. It's crucial to be aware of this bias and strive to objectively evaluate all available information before making any investment decisions.
Another common psychological trap is FOMO, or the fear of missing out.
The rapid price movements and hype surrounding certain cryptocurrencies can create a sense of urgency and pressure to invest, even without proper due diligence. This fear-driven decision-making can lead to buying at inflated prices and potentially experiencing significant losses.
It's essential to resist the urge to react impulsively to market hype and stick to a well-defined investment strategy based on thorough research and risk assessment.
Greed is another powerful emotion that can cloud judgment and lead to poor investment decisions. The allure of quick profits can tempt investors to take on excessive risk, potentially chasing unrealistic returns and ignoring warning signs.
It's crucial to set realistic expectations, understand one's risk tolerance, and stick to a disciplined investment approach to avoid falling prey to greed-driven mistakes.
Another important psychological factor to consider is loss aversion, the tendency to feel the pain of a loss more intensely than the pleasure of an equivalent gain. This aversion to losses can lead investors to hold on to losing investments for too long, hoping for a rebound, or selling winning investments prematurely out of fear of a reversal.
It's essential to have a clear exit strategy and be willing to cut losses when necessary, as well as to let profits run when the investment thesis remains intact.
Understanding these psychological biases and developing a rational and disciplined approach to investing can help individuals navigate the emotional roller coaster of the cryptocurrency market and make more informed decisions about XRP and other digital assets.
Remember, investing is a marathon, not a sprint. Patience, discipline, and a sound understanding of both the technical and psychological aspects of the market are essential for long-term success.
Now let's address a common question that arises when discussing XRP, its potential use cases beyond cross-border payments. While XRP is primarily known for its role in facilitating international transactions, are there other applications being explored or developed that could expand its utility and value?
While cross-border payments are undoubtedly XRP's flagship use case, its underlying technology and functionality have the potential to be applied to a wider range of applications. One area that's been gaining traction is micropayments.
Micropayments, or small value transactions, often fractions of a cent, are impractical to process using traditional payment systems due to high fees. XRP's low transaction fees and fast settlement times make it well suited for enabling micropayments for various use cases, such as content monetization, tipping creators, and even facilitating machine-to-machine payments in the Internet of Things.
Another potential application is supply chain management.
The XRP ledger's immutability and transparency make it a valuable tool for tracking goods and materials as they move through the supply chain, providing enhanced visibility and accountability. This could help businesses improve efficiency, reduce costs, and combat fraud and counterfeiting.
The decentralized nature of the XRP ledger also lends itself to applications in decentralized finance, DeFi.
DeFi platforms aim to recreate traditional financial services, such as lending, borrowing, and trading. On a decentralized blockchain network, XRP's speed and low fees could make it a valuable asset for facilitating transactions and enabling more efficient DeFi applications.
Beyond these specific examples, the potential applications of XRP are vast and still being explored. As the cryptocurrency market continues to mature and new technologies emerge, we can expect to see even more innovative use cases for XRP and its underlying blockchain technology. Now, let's delve into a topic that's often debated when discussing XRP: its degree of decentralization. As we've touched on throughout our deep dive, XRP operates on a decentralized ledger, but Ripple's influence over the network raises concerns about centralization.
It's a complex issue with no easy answers. On the one hand, the XRP ledger itself is technically decentralized, meaning that it's not controlled by a single entity. Transactions are validated by a network of independent nodes, and no single party can alter the ledger's history. However, Ripple's role in the ecosystem is significant. It owns a large percentage of XRP tokens, influences the development of the XRP ledger, and has the ability to select validators for the UNO. This level of control creates a perception of centralization, and some argue that it undermines the true spirit of decentralization that many associate with cryptocurrencies.
It's a valid concern. The debate about XRP's decentralization is ongoing, and there are no easy solutions.
Some argue that Ripple's involvement is necessary for XRP's success, providing stability, direction, and resources that a purely decentralized project might lack. Others believe that Ripple's influence compromises XRP's decentralization and exposes it to potential risks, such as censorship or manipulation. It's a delicate balance, and the future of XRP will likely depend on how Ripple navigates this tension between centralization and decentralization.
The level of transparency, community involvement, and independent development on the XRP ledger will be key factors to watch as the project evolves. Now, let's shift our focus to a more speculative topic: the potential price predictions for XRP in the long term. Predicting cryptocurrency prices is notoriously difficult. But are there any trends or factors that suggest a possible range of outcomes for XRP's future value?
Predicting cryptocurrency prices is notoriously challenging, and XRP is no exception. The market is highly volatile and susceptible to various factors, including regulatory changes, technological advancements, and overall market sentiment. However, we can examine historical trends, current market dynamics, and expert opinions to gain some insights into the potential range of outcomes for XRP's future price. As we've discussed, XRP has experienced significant price swings in the past. It has reached all-time highs above $3 and endured prolonged periods of decline. Its current price reflects a recovery from the crypto winter of 2022 and 2023, and its recent performance suggests strong bullish momentum. Several analysts have issued optimistic price predictions for XRP, ranging from $4 to $9 in the near term, with some even projecting a market cap of $500 billion, which would imply a price of around $6.40.
These predictions are based on various factors, including Ripple's partnerships, growing adoption by financial institutions, positive regulatory developments, and the potential for increased demand driven by new use cases.
However, it's important to approach these predictions with caution. The cryptocurrency market is notoriously unpredictable, and unforeseen events could easily derail even the most well-reasoned forecasts. Additionally, as we've explored earlier, there are also concerns about XRP's centralization, competition from other projects, and the evolving regulatory landscape, all of which could impact its future price trajectory.
Therefore, it's crucial for investors to conduct their own research, consider all potential scenarios, and make informed decisions based on their individual risk tolerance and investment goals. The future of XRP, like any cryptocurrency, remains uncertain, but its potential for both growth and disruption within the financial system is undeniable.
Now let's take a closer look at some of the factors that could potentially drive XRP's price higher in the future. What are some of the key catalysts that investors are watching for that could signal a bullish trend for XRP?
One of the most significant catalysts would be a favorable resolution to Ripple's ongoing legal battle with the SEC. A decisive victory for Ripple in this case would remove a significant cloud of uncertainty hanging over XRP, and potentially pave the way for wider adoption by financial institutions and investors.
Another positive development would be the approval of an XRP ETF by regulatory authorities. An ETF would make XRP more accessible to traditional investors, potentially driving a surge in demand and pushing its price higher.
The continued expansion of Ripple's network of partners and the growing adoption of XRP for cross-border payments could also contribute to a bullish price trend.
As more businesses and financial institutions integrate XRP into their operations, demand for the token is likely to increase, driving up its value. Additionally, the development of new and innovative use cases for XRP, such as micropayments, supply chain management, and DeFi applications, could unlock further value and attract new investors. These emerging applications could expand XRP's utility beyond its core focus on cross-border payments, potentially leading to a surge in demand and price appreciation.
However, it's also important to consider the potential risks and headwinds that could hinder XRP's price growth. What are some of the factors that investors are monitoring that could signal a bearish trend for XRP?
A negative outcome in Ripple's legal battle with the SEC would be a significant setback for XRP. It would create uncertainty and potentially limit its adoption by mainstream financial institutions. Increased regulatory scrutiny or restrictive regulations in key jurisdictions could also dampen investor sentiment and hinder XRP's growth.
The emergence of strong competitors, either from existing cryptocurrencies or established payment providers, could erode XRP's market share and limit its price potential. Additionally, negative macroeconomic conditions, such as a global recession or a prolonged bear market in cryptocurrencies, could impact XRP's price just as it would affect other digital assets. Investors need to be aware of these potential risks and monitor the market closely for any signs of a shifting sentiment.
Now let's step back from the technical details and consider the broader implications of XRP. and its potential impact on the future of finance. If XRP continues its growth trajectory and achieves widespread adoption, what kind of transformative changes could we see in the way we conduct financial transactions?
One of the most significant impacts could be the transformation of cross-border payments. XRP's speed, low cost, and scalability could make sending money across borders faster, cheaper, and more efficient than current methods, potentially benefiting individuals, businesses, and even entire economies.
The increased accessibility and affordability of cross-border payments could facilitate global trade, promote financial inclusion, and empower individuals in developing countries.
The integration of XRP into existing financial systems could also lead to greater interoperability between traditional finance and the world of cryptocurrencies. This could bridge the gap between these two worlds, fostering innovation and creating new opportunities for both established players and emerging fintech startups.
However, it's also important to consider the potential challenges and risks associated with XRP's integration into the global financial system. Concerns about centralization, regulatory uncertainty, and the potential for disruption to existing power structures need to be carefully addressed.
The success of XRP in transforming the financial landscape will depend not only on its technological capabilities, but also on its ability to navigate these complex social, economic, and political dynamics.
It's a journey that will be closely watched by investors, regulators, and anyone interested in the evolution of money and finance in the digital age.
Now let's address a common question that arises when discussing XRP's impact on the financial system: its potential role in the development of central bank digital currencies, CBDCs. CBDCs, digital versions of fiat currencies issued by central banks, are gaining increasing attention from governments and financial institutions worldwide. How could XRP potentially interact with CBDCs, and what opportunities or challenges might arise from this convergence?
One possibility is that XRP could serve as a bridge currency between different CBDCs, facilitating seamless and efficient exchange between them.
This could enhance the interoperability of CBDCs, enabling cross-border transactions between countries using different digital currencies. XRP's existing infrastructure and partnerships with financial institutions could make it well-suited for this role, potentially positioning it as a key player in the emerging CBDC landscape.
However, there are also potential challenges to consider. Central banks may prioritize the use of their own blockchain networks for CBDC transactions, potentially limiting the role of XRP in this space.
Additionally, regulatory concerns and potential conflicts of interest between central banks and private companies like Ripple could create barriers to collaboration.
The interaction between XRP and CBDCs is an evolving landscape, and its future trajectory will depend on various factors, including the design and implementation of CBDCs, regulatory decisions, and the willingness of central banks to collaborate with private sector players like Ripple. It's an area that warrants close attention, as it could significantly impact the future of both XRP and the broader cryptocurrency ecosystem.
Now let's shift our focus to a topic that's increasingly relevant in the world of cryptocurrencies: sustainability and environmental impact. The energy consumption associated with certain cryptocurrencies, particularly those using proof-of-work consensus mechanisms like Bitcoin, has raised concerns about their environmental footprint. How does XRP compare to other cryptocurrencies in terms of sustainability, and what steps are being taken to address any environmental concerns?
One of XRP's key advantages in terms of sustainability is its consensus mechanism. As we've discussed, XRP uses the Ripple Consensus Protocol, RPCA, which doesn't require energy-intensive mining like Bitcoin. This makes XRP significantly more energy efficient than many other popular cryptocurrencies.
Ripple has also made a commitment to sustainability, setting ambitious goals to achieve carbon neutrality by 2030. They've partnered with various organizations to promote renewable energy sources and invest in carbon offset projects.
These efforts demonstrate a recognition of the importance of environmental responsibility within the cryptocurrency industry.
The sustainability of cryptocurrencies is an ongoing discussion, and XRP's focus on energy efficiency and environmental initiatives positions it favorably in this regard.
Now let's shift our focus to the future of XRP. The cryptocurrency landscape is constantly evolving, with new technologies emerging and challenging the status quo.
What are some of the key trends and developments that could shape the future of XRP and its role in the financial system?
One significant trend is the rise of decentralized finance, or DeFi, which we touched on earlier. DeFi platforms aim to create a more open, transparent, and accessible financial system, bypassing traditional intermediaries like banks. XRP's speed, low fees, and scalability could make it a valuable asset for powering DeFi applications, particularly those focused on payments, lending, and trading. However, XRP also faces competition from other cryptocurrencies that are actively being integrated into DeFi ecosystems.
Another trend to watch is the development of interoperability solutions that aim to connect different blockchains and enable seamless transfer of assets between them.
Currently, most blockchains operate in isolation, limiting their functionality and reach. Interoperability solutions could unlock new possibilities for XRP by enabling it to interact with other blockchain networks and expand its use cases.
The increasing adoption of blockchain technology by governments and corporations is another significant development that could benefit XRP. As more organizations explore blockchain solutions for various applications, from supply chain management to identity verification, XRP could be well positioned to capitalize on this growing demand.
However, XRP also faces challenges and uncertainties. The regulatory landscape remains complex and evolving, and unfavorable regulations could hinder its growth and adoption. The competition within the cryptocurrency market is intense, with new projects emerging regularly, vying for a share of the same market.
XRP's ability to navigate these challenges, adapt to changing trends, and continue to innovate will be crucial for its long-term success. Now, before we wrap up our deep dive into XRP, I want to touch on a topic that's often overlooked but crucial for any investor: the psychological aspects of investing in cryptocurrencies.
The crypto market is known for its volatility and emotional swings.
How can investors manage the psychological challenges of investing in such a volatile asset class?
One of the most important things is to have a clear investment strategy and stick to it. Regardless of market fluctuations, this means setting realistic goals, understanding your risk tolerance, and avoiding impulsive decisions driven by fear or greed. It's also essential to diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different asset classes to mitigate risk.
Stay informed about market trends and news, but avoid getting caught up in the hype.
Do your own research and make informed decisions based on facts, not emotions.
Remember that investing in cryptocurrencies is a long-term game. Patience and discipline are key to navigating the volatility and achieving your investment goals. Now it's time for us to synthesize all the information we've gathered and assign XRP an investment sentiment rating. On a scale of 1 to 10, considering both its strengths and weaknesses, what would you say is a fair rating for XRP as of today, January 13, 2025?
Taking all factors into account, I would give XRP a rating of 7 out of 10.
That seems like a balanced assessment reflecting its potential while acknowledging the inherent risks and uncertainties.
XRP has a lot going for it, including its speed, low transaction costs, growing adoption by financial institutions, and a passionate community. However, concerns about centralization, competition, and regulatory challenges warrant caution.
Overall, it seems XRP remains a compelling investment opportunity. But it's essential for investors to do their due diligence and make informed decisions based on their own risk tolerance and investment goals. This concludes our deep dive into XRP as an investment in 2025. We hope you found this analysis informative and valuable.
We encourage you to continue your research and stay up to date on the latest developments in the cryptocurrency market.
As always, thank you for joining us on Crypto Analytica. Don't forget to like this video, subscribe to our channel, and leave your thoughts and questions in the comments below.
Until next time, happy investing.